Thinking about buying a home in 2025. It can feel overwhelming. Interest rates fluctuate, loan options multiply, and the whole process seems complicated. But don't worry. This is your ultimate, no-fluff mortgage guide for 2025. I'm going to walk you through everything from current market trends to the types of loans, credit requirements, down payments, and even refinancing. By the end, you'll know exactly what to expect and how to prepare. Let's dive in. Current market overview. As of mid-2025, mortgage rates have settled around 6.85% for a 30-year fixed loan, with 15-year fixed loans typically a little lower. Adjustable rate mortgages, or ARMs, are becoming popular again because they often start with lower rates that adjust after a set period. The Federal Reserve has managed to cool inflation a bit, which helps stabilize rates after the highs of 2022 and 2023. However, housing demand remains strong, especially in affordable metro areas where inventory is tight. This means lenders are offering more flexible loan products tailored to different buyer needs. For example, some lenders now allow smaller down payments or work with buyers who have less than perfect credit. Keep in mind that economic changes can still impact rates, so staying informed is key. Types of loans. Understanding your loan options is critical. Conventional loans are the most common. They usually require a credit score of 620 or higher and a minimum down payment of 3%. FHA loans are backed by the Federal Housing Administration. They're great for first-time buyers or those with credit scores as low as 580. The minimum down payment is 3.5%. VA loans offer zero down payments for qualified veterans and active military members. No private mortgage insurance is required either. USDA loans also offer zero down for buyers in designated rural or small-town areas. Jumbo loans are for properties priced above conforming loan limits. They often require higher credit scores and larger down payments. Non-QM loans are designed for borrowers who don't fit traditional lending guidelines like self-employed individuals or those with irregular income. There are two main types of interest rates. Fixed-rate mortgages lock in your interest rate for the life of the loan, giving you predictable monthly payments. Adjustable rate mortgages start with lower rates that can change after a set period, usually 5, 7, or 10 years. They can save you money if you plan to sell or refinance before rates adjust. Credit and income. Credit scores heavily impact the loan terms you qualify for. Most conventional lenders want a minimum credit score of 620, but higher scores get you better rates. FHA loans accept scores as low as 580. Making them a good option for buyers rebuilding credit. VA and USDA loans are often more lenient with credit requirements. Another important factor is your debt-to-income ratio, or DTI. This measures your total monthly debts, including your potential mortgage payment against your gross monthly income. Lenders generally want this to be under 43%, though some programs allow up to 50% in certain cases. To improve your chances, focus on paying down credit cards and avoid opening new lines of credit before or during your mortgage application. Also, keep your credit utilization below 30% to boost your score. Down payment and assistance. Contrary to popular belief, you don't need a 20% down payment to buy a home. Most buyers put down between 3% and 5% in 2025. There are many assistance programs available, especially for first-time buyers. These include state and local grants, forgivable loans, and down payment assistance programs. Some even help with closing costs. For example, some states offer grants that don't need to be paid back if you live in the home for a set period. There are also programs targeted at teachers, healthcare workers, and veterans. Be sure to research programs in your area and talk with your mortgage broker about options you may qualify for. Pre-approval and shopping. Lenders getting pre-approved before house hunting is crucial. Pre-approval is different from pre-qualification. It's a lender's conditional commitment to loan you a certain amount based on your financial info. This strengthens your offer and helps you know your budget. Don't just stick with one lender. Mortgage brokers can shop multiple lenders on your behalf to find the best rates and terms. This can save you thousands over the life of your loan. Ask lenders if their pre-approval uses a soft credit pull which doesn't affect your score or a hard pull which does. Try to limit hard pulls to avoid score drops. Closing costs. Closing costs are fees paid when you finalize your home purchase. These typically range from 2% to 5% of your loan amount. Typical closing costs include appraisal fees, title insurance, and escrow fees, loan origination fees, prepaid taxes, and homeowners insurance. Some costs are negotiable or can be covered by the seller, especially in a buyer's market. Ask your lender for a loan estimate early on. It outlines expected costs, so you're not caught off guard. Timeline to close. On average, it takes 30 to 45 days to close on a mortgage, though some closings happen faster or slower depending on circumstances. Common delays include missing documents, appraisal issues, or unexpected credit changes. Stay organized and respond quickly to requests from your lender to avoid delays. Once you're under contract, lock in your interest rate to protect against market fluctuations before closing. Refinancing in 2025. Refinancing is worth considering if your current mortgage rate is at least 1% higher than current rates. Other reasons to refinance include pulling cash out for home improvements or debt consolidation, eliminating private mortgage insurance, shortening your loan term to save on interest. With fixed mortgage rates recently dipping below 7%, refinancing can be a smart move, but always weigh closing costs against potential savings. Common mistakes to avoid these common pitfalls during the mortgage process. Don't open new credit cards or take out new loans during underwriting. This can change your credit profile and delay approval. Read your loan estimate carefully and ask questions about any fees you don't understand. Never skip the home inspection just to make your offer more attractive. Consider all monthly housing costs, including taxes, insurance, and HOA fees, not just your mortgage payment. Final tips and call to action. Mortgage rules and markets evolve. Work with a trusted mortgage broker or loan officer who keeps you informed throughout the process. Start early, know your numbers, and focus on the loan that fits your financial goals, not just the lowest rate. Ready to take the next step? Book a free consultation today, and let's make your 2025 homeownership dream a reality. Don't forget to subscribe for more real estate tips and ask your questions in the comments below.